split. Good afternoon, everyone, and thank you for joining us today for our Adapting and Innovating Beyond COVID-19 webinar series. Today's webinar is focused on managing cash flow in a crisis. My name is Drew Barvier, and I'm a co-chair of the Loan Review Committee and member of the volunteer leadership team with Access Community Capital Fund. Before we dive into the presentation today, I'd like to introduce you to our presenter, Dami Adejola. Dami is a chartered accountant with over 5 years of experience advising small entrepreneurial businesses, evaluating business plans, and providing innovative credit opportunities across the private and nonprofit sectors in Canada and Nigeria. She attended Schulich School of Business, where she earned an MBA in Finance and Entrepreneurship. She is passionate about private capital as a vehicle for social impact and economic growth, and supporting impactful businesses through access to capital, with a focus on strategic investments, lending, and financial advisory. She is also a co-chair of the Loan Review Committee and a WBA business coach. Before passing it off to Dami, I'm going to run through a few housekeeping items as well as introduce everyone to Access Community Capital Fund. If you're new to Zoom, the menu bar is located at the bottom of your screen. In this menu bar, you can find the video, sound, chat box, and the Q&A box. For the purpose of this webinar, all attendees' mics are muted in order to ensure the best sound quality. If you have any questions for the speakers, please type them in the Q&A box, and we'll do our best to address your questions during the Q&A at the end of the webinar. If you have any tech-related issues or general questions, please type them into the general chat box rather than the Q&A box. We'll post any links helpful to you in the chat box. Lastly, we will be asking you to participate in a few polls throughout the session. We will share results in real time, which will help inform our focus areas for the session. Moving on to Access. Access Community Capital Fund is a registered charity aiming to help people achieve their dreams of owning a business or finding success in a rewarding career. So what does that mean? It means providing affordable loans through a character-based model, giving everyone in the community an equal opportunity to reach their potential and create long-term financial stability. This support is offered across several programs, including business loans, which provides low-interest loans to emerging entrepreneurs, our foreign credential recognition program, which helps provide costs for accredited programs to individuals, and the Women in Business Accelerator, which helps support new women entrepreneurs in starting their businesses. Collectively, these have a big impact on the community, as you can see from some of the stats listed out on this slide. If you'd like to learn more about what we do, please visit our website at accessccf.com. I'll now pass it off to Dami, who will take you through the rest of the session.
Thank you, Drew, for the introduction. And welcome again to today's Access webinar series, where we'll be talking about managing business cash flow in crisis. I'm looking this way, my camera by the left, and my screen is just right in front of me, so I am well engaged with everybody. So today we'll be going through the following.
Hey, Dami, sorry, the beginning of that was a bit fuzzy again, and then it ended up sounding all right at the end. So maybe it was just a bit of a glitch there, but might be worth it to start over at the start.
Oh my God, what is wrong with this internet? Okay, let's take it again. Thanks. Sorry, I'm sorry.
Oh, sorry, Dami, you're cutting out again. Were you asking a question?
Oh no, I just said, so sorry that we have to start again.
Oh yeah, no problem.
So I'm back to the beginning.
Okay, yeah. Okay, capture. I'll start again. Second.
Thank you, Drew, for the introduction, and welcome again to one of Access's webinar series. And today we'll be talking about managing this cash flow in a time like this, COVID-19 crisis. And pardon me if I'm looking forward and looking away from the camera. It's because my camera is to my left and my screen is just right ahead of me.
Hey, Dami,
So
sorry, it's not working.
Oh my God.
Thank you, Drew, for that introduction. So today, as part of the Access's webinar series, we'll be going through managing business cash flow in a crisis time like this, the COVID-19 pandemic. So this is the agenda we'll be going through. So very quickly, we'd run through an introduction, and then what is cash flow and what is its management like? And then what is a cash flow budget and how to prepare a cash flow budget? And finally, we'll talk through practical steps to managing your cash flow in a crisis time like this, and would close with questions and answers. So a lot of business owners do not really know, the clear differences between these three metrics: the revenue, profit, and cash. And today, I just wanted to start by, clarifying the separation between all or among all three of these items. So revenue, as we can see from this quote, is vanity. And what that means is it is important, but not as valuable. So it's the top line, which shows how much money, or not money, but how much your business is generating in terms of sales. So what are you able to sell from whatever business or services that you are offering? And then the profit represents sanity. That is, it shows that yes, you're being rewarded for the effort, time, and resources that you're putting into, this business that you are running. And then the last item here is cash, which is the money, which is the fund. This is reality. This actually shows the health of your business. When you see, how much cash that you have with you, you're able to expand, you're able to, improve your operations, do anything that you need to do to boost and grow your business. Cash is king, cash is reality. And that is why it is even much more important at a crisis time like this, when things are very uncertain and you need to be as nimble as possible to survive. So what is cash flow very quickly? So cash flow is essentially the snapshot of all the cash that is coming into your business and out of your business at a particular point in time for a period. So it essentially gauges the relative long-term health of your business. Like I said earlier, you literally need cash for, everything you want to achieve or do with your business. So cash is the lifeblood of businesses, as we must have heard, a lot of times. And we can see the last statement here, a result from a statistics that shows that 1/3 of entrepreneurs run their companies without any sort of financial plan. So today, we are going to, help us be part of those 2/3 that actually run their businesses with financial plan, which helps companies to survive at a time like this and even beyond, because it's just very important that you plan, everything pertaining to your business for you to achieve those goals and objectives that you've set for your business. So we are going to go through the results from a poll that we are taking during the live session of this webinar. And we asked our audience if they have been using, a cash flow budget. and 66% of the audience indicated that they do use a cash flow budget. 25% of the audience indicated that they used to use a cash flow budget. And 9% of the audience indicated that they do not use any form of cash flow budget. So it was a pretty much, good result in that a large proportion of the audience already use a cash flow budget and they're very familiar to some extent with what that entails. So makes the discussion today a lot easier and relatable. And this here is a chart indicating the major causes of cash flow problems among small businesses. So we see at the top here that 30% of business owners have cash flow problems because of difficulty in collecting accounts receivables. 23% of business owners have problems because of seasonality of sales. 15% have problems because of unexpected variation in sales, very similar to seasonality of sales. And then 13% do face cash flow problems as a result of weak sales. So we can see a common trend in all of these cash flow problems, which is that they all have a relationship with sales. So that is to show that sales, which is, your revenue, is the path through which you generate cash. But sales could be, credit sales or cash sales. So most of the time, if you have a lot of credit sales, you need to be able to convert that to cash by collecting, from your debtors as soon as possible. And we also notice that all of these cash flow problems are present in our current COVID-19 environment. In fact, they are exaggerated and, very much common in this pandemic, period, which also, made this webinar series even much more important for our clients and audience out there. So what is the cash flow management? It essentially means, forecasting, collecting, disbursing, investing, and planning for the cash a company needs to operate smoothly. So you're able to ascertain now what your cash needs would look like for a future, period of time, say 6 months, 1 year, usually 1 year most times. And as a result of that forecast, you're able to plan now ahead of, those cash needs or whatever you have seen, or expected into the future. And the first step to managing your cash flow is preparing and maintaining a cash flow budget. So it's very interesting, again, that a lot of our audience do prepare cash flow budgets, so they have some idea of what that involves and pertains to. So that is always the number one step to taking your cash flow management to a whole new level. So we'll very quickly go through what a cash flow budget, means and what the process looks like. So budgeting is essentially breaking down the money you expect to come into your business. And what I mean by that is the cash that you realistically expect to receive in your business and the cash you realistically expect to spend and take out of your business, indicating how much cash will be left over, for a specific period of time. So a lot of, companies or businesses usually track their cash flow on a monthly basis, but depending on the amount of transactions that you see your business go through, you could even do it more often, maybe weekly, bi-weekly, and the likes. But you essentially need to constantly analyze what your cash flow would look like, just so that you can mitigate against any problems, any cash crunch, and things like that. And it helps you to reassess and reprioritize your cash needs for the business. So it is very important to do. As you can see here, a very quick formula is just, adding together all your total cash inflows, subtracting all your total cash outflows. That gives you what your net cash flow is. If you're positive, all well and good. But if you have a negative net cash flow for, result, then you need to make some adjustments and really look into how you can mitigate for that. But thankfully, the budget will allow you to see this net cash flow, be it positive or negative, ahead of time, so that you can plan, towards that. So why cash flow budgeting is very important, as we've already been talking about, it increases the amount and speed of cash coming in. So if you already know what your cash outlook, looks like for the next 6 months, you'd be able to already plan and, mitigate for any problems that you envisage. Be it, increasing cash that you need for your business because you see a negative cash flow in the next 2-3 months, or not. But also, it is very important to also reduce the amount and speed of cash going out. Ties back to the first point. If you see that you would be having a negative cash flow in some time to come, you can, maybe cut back on your expenses now. And fourthly, it helps to anticipate and estimate the business need for additional financing and repayment. Again, because you're able to see ahead of time, you can anticipate your cash need for your business and begin to source for how you can, provide or find that much needed cash. And finally, the budget can help you to reduce your borrowing costs by borrowing only when it is necessary. So if you know that you wouldn't, have a need for cash or for borrowing for the next 6 months to come, there is no need for you to borrow, money now. You can borrow like in the 4th month or in the 5th month. And as we all know that the borrowing cost, the interest is based on how much time, this loan has been extended to us. The shorter the period of time you have the loan for, the lower your interest cost that you would essentially pay on that money. So what are key area of focus when you're preparing a cash budget? So like we've mentioned earlier, is basically estimating your total cash inflows, total cash outflows, and then subtracting those two would give you your net cash flow. So what are the components of your cash inflow if you were to pull that together? The first big item there is your cash sales. So how much do you realistically expect to collect in cash from your revenue, from the sales that you're making in a particular period of time? So imagine if you're going to make sales of, let's say, 2,000 in a month, but those 2,000, do they represent cash in your pockets or in your bank account? Maybe not. So how much of that 2,000 would you realistically have in form of cash? And how much would you not have in form of cash? So you have to be clear and realistic as much as possible. And in estimating that, because the cash sales, is a huge chunk of your business and it has components to it. You want to break down that cash sales or that sales figure into components, just so you can realistically estimate and accurately estimate for that number. So sales, is made up of price, that you're selling your item for, multiplied by the quantity that you imagine to sell. So you want to estimate how much price can I realistically sell this product at, and how many quantity can I realistically sell in this month or week or whatever period you've chosen to prepare your cash budget. So when you come up with that revenue figure, then you estimate, okay, how much of this will I realistically sell or make in cash at my bank or cash in my pocket? So adding to that, your own owner's capital would also be, a form of cash inflows, and then grants from the government or from some, non-for-profit. A lot of programs are out there right now that you can, take advantage of to get more cash into your business, so you can realistically estimate for those monies as well. And then, would you be needing any loan, or would you be collecting any loan from the bank? As we may know right now, all the big banks in Canada are giving a 40,000 loan, like interest-free loan, to small business owners. So this could be one of your loan items or cash inflows under this category. And lastly, what are the government supports that are out there that you can leverage on to bring in cash into your business? So there are a lot of programs out there that you can, find out and apply for to just get as much cash as possible into your business. And what are the components of your cash outflows? So just like I mentioned for cash sales, payments to suppliers here are the big, expense item under your cash outflows. This is the biggest item you'll be paying for from your business. So you also want to break this down into, okay, how much price would I realistically get this item for from my suppliers, and how many quantity would I realistically, buy from these suppliers? Of course, this ties back to how much you must have estimated you can sell, because the quantity, based on the quantity you realistically estimate you can sell, that would inform how much quantity you need to buy from your suppliers. So you estimate what are the cash payments going to the suppliers at this period of time, wages and salaries to your provider of labor, how much would you realistically pay for rent, and then loan repayment, and then income tax. So a lot of us must have known that, the banks in Canada right now, they are allowing for deferral of loan repayment obligations because of this crisis period where, people might be short on cash. So also with the income tax, the government has extended, the time for tax returns and things like that, just to help people conserve on cash outflows. And lastly, that gives you what your net cash flow would look like. So your total cash inflows all added up minus your total cash outflows all added up would give you what your net cash flow looks like for every, for each period of time in your budget. So should you have a positive net cash flow in a period, you're good. It's a feasible cash flow plan that provides cash flow cushion for you. Or should you have a negative net cash flow, then you begin to, look for a way to adjust and move things around just so you can arrive at a positive net cash flow to avoid for cash crunch. So very quickly, I would we see here a tool or a sample of what a cash flow budget looks like. So you see the cash in broken down into components. We see the cash outflow broken down into components, and then we see the net cash flow and the cash balance at the end of every month. So this is a sample of Access's cash flow budget document, which can be a very good starting point for a lot of us that do not prepare cash flow budget as of now, or might just want to review our cash flow budgeting system and just learn from, a source like this, because this was prepared by, competent finance professionals and analysts, and it might be a great tool to take a look at and go from there. So what do you do when you have a negative net cash flow? So like I said, net cash flow is essentially cash shortfall. That is, an emerging cash crunch coming down that you need to mitigate. So these are some of the ways that we can mitigate for that. So you can explore opportunities to increase your revenue. So are there other avenues to make more sales that you've not, looked at? So you begin to assess for that. ahead of time. And then you can explore opportunities to reduce operating expenses. So are these expenses, really necessary? Is it too much? Can I not spend this? These are the kind of questions you'll be asking yourself for each of these operating expenses. And I'll mention that in this case, you first of all take a look at the big, expense items in your budget. Oh my God, this amount looks so big. I think, I can reduce this further. Break it down. What is the component of that big operating expense? If it's not necessary, you can reduce it, and that's some cushion right there. Also, you can assess borrowing more money or seeking other sources of fund, because you can see that maybe you've explored all the options available to you, but there is still no way that you can get, extra cash into your business, so you can borrow more money, but borrowing at the right time, like we discussed earlier. And then you can also shift the timing of certain transactions. So if a transaction is not compulsorily for a period of time and can be deferred into the future, why not do that? Why not defer it into a month or a week or a period of time when you have positive net cash flow to accommodate for that, for that expense? So you can shift and move things around as well in your budget to mitigate for any negative net cash flow. And finally, you can assess for possible excess inventory. Should you be putting too much money in inventory that, you're just sitting on unsold inventory? You might reduce that just to free up some cash flow. Because again, this is an environment where you have to conserve cash as much as possible to stay nimble, because nobody knows what is going to happen next. So much uncertainty. And if you do have a positive net cash flow, congratulations, that is good news. Shows that the cash coming into your business is more than going out of your business, and that is good. So that can help you to borrow less money. It can also help you to, direct excess cash into interest-bearing assets, thereby, providing additional income for your business. And also, lastly, you can even increase, your loan payment, so that you can reduce your total, interest payment, your total borrowing cost at the end of the day. So what are the practical steps that we can take now in this time of crisis to manage, our business cash flow? So first and foremost, you have to focus on cash to cash conversion cycle. I cannot, emphasize this enough. You have to, understand from the get-go, from the point of sale, how quickly will this, convert to cash in my bank or cash in my pocket. So you can begin to evaluate your terms. What are the credit terms you give to customers? Are you giving them 20 days to, to pay up their credit, or what is it? So you want to make it as, good as possible to convert cash for your business speedily and consistently. And then you want to also enforce payment discipline. If you need to, get a lawyer to help you enforce these terms, you should, because this is the time that you need to get, all the cash from your business as much as possible. You don't want too many people holding on to the cash that you should have in your bank account. And lastly, which is very important here, is to segment your customers and suppliers. So we all, are familiar with the 80-20 rule. So just as we know that that applies to this situation here, where, about 20% of your customers, contribute to 80% of your revenue. So this, your top client, you want to, take, prioritize them, connect with them on a regular basis to convert that money into your business, because essentially 80% of your revenue lies with those top clients of yours. And the second step is to take effective control of your receivables. So this is very important as well. You don't want as much money, lying outside with your debtors. You want to be very speedy, and consistent with how you engage collecting and turning those receivables into cash. So, and one thing to do, in this case, is to have realistic and honest talks with your customers, because we all know, and everybody, in the world right now knows what is going on, knows, the economic implication of this pandemic. So just having honest talk with them. Okay, I need, the cash from you for me to get to do so, and so. And, make this very consistent as well. Maybe not being too pressuring, but be consistent with them, because just like they are owing you, they must be owing some other suppliers as well. So you want to be, at the back of their mind. Should they want to pay out any of their suppliers, let it be you, because you've been communicating with them, consistently. So stay in touch with your clients. And finally, on this point is you can even offer your clients, a payment plan, because some cash or some money is better than no money. So you can offer them, if you're not able to pay everything you're owing me at once, how about, paying 25% now, 25% in another month's time, and, just develop a plan with them, realistically, that they can also commit and agree to. And thirdly, you want to review and prioritize all your payables. So as much as possible, you want to delay payments as much as possible. So only critical payments would be paid out in this, in this time. Critical payments such as, let's say, salaries and wages, because these are families that are also depending on you, right? So, but a lot of these other payments, if they're not critical, if, they wouldn't make or mar your business survival, you can defer them into a time when everything is back up and running and the economy is beginning to, smoothing out, and we have some sort of certainty into what the future holds. So we can already know that a lot of banks are allowing clients to defer their interest payment, or even do only interest only for a period of time. So you can also negotiate extensions with your suppliers. Again, honestly talking to them and committing to what you can realistically, meet up. So fourthly, you want to review your entire cost in view of the new reality. So we can already tell that this is a new time, and most things will not return to normal. So you want to evaluate your business in terms of all the expenses, and all the income that will be coming into your business. Do this still look normal? Like, will this still happen with this situation that we are in now? So we can tell that a lot of companies are beginning to go virtual, because they just see that, that's how to work best in this environment. And virtual also, reduces cost for businesses a lot. So at this time around, you want to evaluate your business. Should I even be, maintaining a storefront physically? Can I not do that online, which would, cut out rent from my expense list at the very least? So you want to go over each of your budget items and revisit those costs. Are these necessary? So that's why, again, budget, or having a budget, is very important, because it gives you a snapshot of what your business expenses and income, looks like at one view. So you want to also review all your debt facilities. Should you have many debts? Because all of them, of course, will be accumulating interest. So even as we already know, as much as the banks are helping with deferring, principal payments or principal repayments, interest is still going to be calculated on that deferred amount. So you want to, eliminate for that extra borrowing cost, as much as possible. So if you can consolidate all your loans into one, which would help to even reduce, your borrowing cost, your interest payment on that loan. You can also leverage assets on your balance sheet. So are there a lot of, receivables you have on your balance sheet? You can take this all together take them to a bank or a financial company and ask how much can they discount it for and give you cash for it. So let's say you have, the total receivables of 2,000. You can speak to a financial company and they can discount you that for like, let's say, I don't know, let's say 25%. So instead of getting 2,000 back in cash, you're able to get 75% of that 2,000 right now, which is about 1,500. So you're able to get 1,500 from that 2,000 in cash, in pocket, in your bank. So all of these things is things that you should assess for. And of course, explore, loans, government support, and grants that are out there to improve, cash flow into your business. And lastly, you want to maximize the cash in your bank. It's not enough to just, conserve cash and have it in your checking account sitting there. You could, put that money to work, even if it is, 2% they are getting on it, it is something. So for example, there are a couple of, high interest savings accounts out there that you can put your money into. There are a couple of, risk-free assets like treasury bills that you can put your money into. But, do not just put that cash in bank lying there doing nothing. You can put them to work and generate interest on them. So also you can negotiate for cash discounts with suppliers, to get to reduce your expenses as much as possible. So with this, we've come to the end of my presentation. Enough talking, and it's time for your questions. Ready to take your questions. Thank you.
Great, thanks, Dami. Really insightful and helpful presentation. As Dami mentioned, we're now going to be moving to the Q&A part of the webinar. So if you have questions, please post them in the Q&A box and we'll do our best to answer all of them live here. The first question for you, Dami, you mentioned cash on hand can be invested in safe and risk-free securities. Could you give us some examples of what those types of securities might be?
There are not a lot of them right now, but I would say first of all, the treasury bill is risk-free, and it is also, a short-term investment security, because as much as you want to, engage your money to earn more income for you, your time horizon that you're looking at is also a short, period of time. So you want to invest in things that you can easily liquidate within a short period of time. So I would say treasury bills. I would say a lot of, high interest savings accounts out there. I know Wealth Simple does have one, EQ Bank has another one, and even Tangerine, do I have high interest savings accounts. So those are the ones that you can look at, and you can also explore a lot more short-term investment securities that are safe or guaranteed, in the market today. A lot of them online, but those are the few that I can, see off the top of my head right now.
Got it. Makes sense. Next question, and I know you ran through a number of helpful tips, around constructing and thinking about cash flow budgeting. How often would you suggest revisiting your cash flow forecast and making tweaks or updating that as you receive new information?
Yeah, so I would say ideally, in a normal situation when we don't have crises and uncertainty like this, we do it, at least every month. But in a time like this, that you have to be on your toes, and a lot of news coming at hand almost every minute, you want to do your review and rebalance even more frequently. So could that could be weekly for some businesses, that could be bi-weekly, depending on the industry you find yourself, and also the amount of transactions that your business engages in. So I would say monthly is the standard, but depending on your business need and how much you want to be current, you want to keep your budget current, you can make that even much more often.
Great. Makes sense. Next one here is about just tracking cash flows and accounts receivable, and if most people do this separately, and what are some of the tools that you can use to do that?
Yeah, so I would say there is this quick book online that is very easy, to keep track of your business records, bookkeeping, and things like that. That as a small business owner you can use and do all your books by yourself. But also, if you don't have access to that, you can always use, old Microsoft Excel spreadsheets. You can never go wrong with spreadsheets, where you're able to have a list of all your debtors and then set out, how much they're owing you, set out the frequency with which you want to reach out to them, and even set up a reminder in there and things like that. So I think we do have, everybody does have, that spreadsheet, Microsoft Excel available to them, and you can, get started with that. But should you want to go a step further, QuickBooks Online is one I would recommend. I think there's also Xero, Xero, pretty good accounting software too.
Cool. Yeah, really, really helpful. Next one, in terms of practical next steps, what would be sort of the first three things you would suggest someone do who's new to cash flow planning? Where would they get started, and what would be sort of those building blocks that you would suggest commencing with?
Thank you, Drew. So I would say the first and foremost thing to do, like I mentioned earlier, step one, begin, just create that cash flow budget. Regardless of how, inaccurate you might think your estimates are, it will give you an insight into how well you're doing in terms of liquidity for the next, 6 to 12 months. So you want to have that snapshot, in a cash flow budget as soon as possible. And with that, begin to make tweaks and, begin to even leverage on the practical tips that we just discussed earlier. So should you see that, I'm going to have a negative net cash flow in the next 3 months, you want to begin to maybe start getting more cash in, either through your account receivables or from some grants or from some loan that you might need and things like that. But first and foremost, you need to create a cash flow budget and make it, as realistic as possible.
Got it. Next question here. I know you mentioned a number of times in your presentation around the criticality of estimating future sales. But as entrepreneurs, people think about this as highly uncertain and very difficult to predict. What would be some of the recommendations that you would have for trying to come up with a reasonable estimate, understanding that this is obviously a very uncertain variable?
Yeah. So in order to do that, because again, where do your sales come from? It comes from your customers. So I would say that would be the first people to talk to, and this goes back to honestly speaking with your customers and realistically understanding what their needs would look like. So you want to maybe talk to them, see what that looks like, see what their need looks like, incorporate for that, and also look at your industry, the industry you operate in. What does sales look like in the coming month or two for us in this industry? Our product going to be useful, our services still going to be in demand, and even if that happens, at what price would we realistically see people buy in this environment? So you want to do those set of internal analysis as well as external analysis to estimate for your sales as much as possible. I know none of this will give you the exact figure or the actual figure, but at least you get closer to something realistic.
Got it. And I know you mentioned or touched on this a bit in your presentation, but be helpful to hear some of the tips you have about engaging with customers or suppliers around understanding how they're thinking about potential sales, but also potentially sort of negotiating amendments to those relationships or agreements.
Yeah. So again, you would you'd segment your customers and your suppliers using, the 20/80 rule. So the 20% of, the top ones that, contribute to the most revenue for your business, you want to, have a meeting with them and letting them understand, where you stand, and also hearing where they stand for you both to realistically come together and agree on a path forward that would be, good for both of you's businesses. Because again, you need each other to do, your business. The suppliers, need you to run their business. Your customers also, they need you to, run their life or their business. So it's a win-win, it's a give and take sort of situation. So you want to come from a win-win perspective to this client and negotiate something doable realistically for both of you. And also you want to also leverage on your relation, like your length of relationship with, these people or these stakeholders to, to come with a proposal and an angle of discussion.
Got it. Yeah, that's really useful advice. Last one here from the group around other resources you suggest that folks could use to further develop their cash flow management skills.
Yeah, so that's a very good question. And I must say there are a lot of resources out there, online, both on YouTube. There are a lot of podcasts, dedicated to managing or helping small businesses manage their cash flow, especially at a time like this. I know like not all of them, but most of the big fours, at least I know of KPMG and Deloitte, they do have, some podcasts out there for small business owners and entrepreneurs to manage their cash flow. So these are the things that you can take advantage of to just learn more and improve your skills in managing your cash flow, because it is very important, for your survival in a time like this and even beyond.
Great. Well, that's the last question we have here, Dami, but really wanted to thank you for a great presentation, and a lot of the insights and tips you provided will certainly be very, very useful for our participants here today.
Thank you.
Just for a reminder to everyone, today's webinar has been recorded, and we'll share the webinar link with everyone. We welcome you to revisit the content and share it with your network if you think it would be helpful. You will also receive a webinar evaluation. Your feedback will assist us in planning upcoming webinars, and you can also provide suggestions on future topics that you'd like us to cover. Again, big thank you to Dami for the terrific presentation, and thank you all again for joining us. Have a great day.
Thank you. Bye.